Hello, everybody. Thank you all for being here. It's Sunday Fun Day. Hello, everybody. And we have volume, which is awesome. And a big thank you, everybody. Yesterday was the April Fool's joke video. Over 40,000 people watched it. And only one person complained, which is amazing. Thank you all. It's always fun to do that. And it was the community that prompted me to do it as well. So let's just jump in. Today is a big show. We're going to look at a lot of stuff. And again, I'm just so impressed with the type of questions that are coming in. So let's jump in. Obviously, this is a disclaimer, only edutainment. That's it. That's all you get here. The questions come from Patreon community, and the breadth of the questions and the depth of them is extraordinary. And it took 16 hours to put this together. So let's just jump in. I work for you guys, and we're coming at the very end of this session. There's a very interesting question as well about career choices at the age of 40, and we'll tackle that. But remember, whatever you're doing, however old or young you are, choose a profession that you are passionate about. For me, I'm passionate about assisting others, helping others wherever I can. That's what gets me going. It's not anything else. So big thank you. Let's jump in. Thank you for the likes in advance. First question is from Karstedt. And this question blew me away. It's like people are coming up with questions that I didn't even think of. And it was genius. And this is fantastic. So I love these. And I'm here to learn too. That's why I love doing the questions. So a quick question for IADSS or even DCAS. That's DCAS, dollar cost averaging on steroids. Does it perform better on Bitcoin USD pair or Bitcoin DXY pair? It's probably close, but it'll be an interesting thing to see if it picks up any difference and what, and we can all speculate on what that means. Well, I'm going to go deep on this because I was like, whoa, I never thought of DXY as a pair to Bitcoin. I've paired it with everything. I've paired it with Dogecoin, you name it, never the DXY. So let's see where we go with this. First of all, we're going to look at two time frames. We're going to look at the daily and the 4 hour, because the DXY over very short time frames really doesn't make sense, but longer time frames it does. So I'm going to pick these two, and we're going to look at Bitcoin dollar versus the daily here. And you can see, let's look at, this is IADSS. We'll look at on the Confluence. It has an ROI of 76%, win percentage 100%. Then trend, 97%, win percent, and mean, 100%. So it looks like the daily does really well on this. Let's see how the DXY does. DXY, here, the ROI is higher. Win percent is 100% as well. The win percent on the trend, 97.58%, and the win on the mean is 96. So the mean here falls down on the DXY. Don't worry, I'm going to bring all the numbers together in a table afterwards because it's very difficult to follow this. Let's go to the 4 hour and see what's going on there. This is the Bitcoin US dollar 4 hour chart. You can see win ratio 97%, trend 74% on Confluence, and 89% on the mean. And then on the DXY, you can see here win percent on the trend 98.3. Confluence 71.89, fell down a bit there, and mean 93.86. So it behaves very differently, but there's a big takeaway at the very end. Let's look at DCAS on Bitcoin dollar, and then DCAS on Bitcoin DXY. This is interesting. So you see here, the key number we need to focus on is the ROI. And under DCA, it's 121.9%. You can see that the spend is 22,200 versus spending less on DCAS, 21,383. But the ROI is 185.8 versus 121.9. So obviously DCAS smashes DCA for Bitcoin on the dollar. But let's check the DXY. This is DCAS Bitcoin DXY. And you can see here the spend is the same, 22.2 versus 17,228. But the ROI is higher. Okay, the ROI, interestingly, is 197.2%. And that is incredible. And that's why this community is so smart. Who would have thunk using the DXY for DCAing instead of Bitcoin against the dollar? But let's summarize all of the data in a little table so you can see exactly how this performed And this is going back over 5 years of data, everybody, back tested. So if you look carefully here, and again, I'm fascinated by this. This is, you can see, DXY works better on the daily for IADSS, and the 4 hour is basically a tie, again, over the last 5 years. Mean reversion works better on the 4 hour for the DXY. Confluence works better on the daily for the DXY. But what's interesting is DCA works better on dollar, and DCAS works better on DXY. So a lot to digest there, but you can see exactly how this works out. And it's fascinating. And of course, what happened in the past may not continue into the future, but this is super, super good, especially for DCAS, how that is so much more helpful. And again, just to recap, again, if you look at the big deviations here, you can see the DXY works better on Confluence on the daily, but not on the 4 hour. And the 4 hour is how all of this is optimized. So again, brilliant question, Crusher. Thank you so much. By the way, this is another visual I put together just so you can see exactly how they perform. The blue is the Bitcoin dollar and red is the Bitcoin DXY. You can see it's very, very tight for most instances, other than that Confluence big deviation where the DXY actually works better. And then you can see that the 4 hour, which works better for DCAS works better for the DXY too. The rest is kind of more or less the same. So I hope that helps. And let's go to the next question. This is from a very good question from Jalvani. And this is, with Bitcoin halving approaching, supply gets halved, but so does the security. And how will Bitcoin survive with security halving every 4 years if the price does not appreciate accordingly? And especially in higher interest rate environment, what's the most popular stand on this security issue? So this is a really good question, and again, another very tricky question too. There's a number of ways of going about answering this. So let's dig in, and I've got a couple of different parts. I hope they make sense. So first of all, the halving increases Bitcoin security by reducing supply in the market because it causes the price to go up, and this makes mining more competitive. And this results in more miners chasing less Bitcoin, making the remaining unmined Bitcoin more valuable. We saw that happen late last year. We saw the hash rate explode because the miners were plugging the rigs in, even though the Bitcoin price is down, because they want to get a jump on mining Bitcoin to be ready for the halving, because they know the run up to April 2024 price will go up, and then after that it'll really go up, at least if history repeats. And that's why we're all in this game. Let's talk about the 51% angle, which I think you might be fishing for as well. And the question I believe you're trying to ask is, what happens if Bitcoin falls below the threshold where it's not profitable for miners to mine it anymore? And this could be a concern, because if the miners drop off, then Bitcoin could become vulnerable to a 51% attack. And that is a valid concern. But let me explain why that's not going to happen. First of all, the protocol, the way it's built, when Bitcoin price drops, it's less efficient miners drop off first, and this causes a drop in the hash rate. However, the algorithm adjusts difficulty every 2016 blocks, which is about every 2 weeks, and that makes mining easier and profitable again. And this is one of the miracles of what Bitcoin is. It is a piece of genius. If the hash power drops too fast, fees increase, and that brings back the miners, and it increases price. And hash power and price, they're interlinked. And as more hash power leads to a more secure network, and therefore a higher value for Bitcoin. And this seeks equilibrium with the 10-minute block times and halved block rewards every 4 years to maintain the security. So again, there's another key X factor here too, is the longer Bitcoin exists, the more it gets adopted. We saw huge adoption happen over the last couple of weeks of the banking crisis. Massive awareness. And of course, it's the best performing asset so far this year, with the exception of MicroStrategy, which is a Bitcoin proxy. So interestingly, let's look at some hash rate charts real fast. This is the Hashrate Today, courtesy of Sanjay. Now, the recent hash rate dip may lead to a less drastic difficulty adjustment in about 3 or 4 days, and the current epoch is over 71% complete. That means 29% left to get to the next halving. And the forecast many have predict a 1.5 to 1.8% increase, which is still better than the upward adjustments earlier this year. And this will help keep the hash price afloat for a little longer, despite being below the $80 per petahash per day, which I think is the current rate. It was at $60 not too long ago. And just to zoom out for everybody, quick, the age-old debate is, does price follow the hash or hash follow the price? Well, you decide for yourself with this chart here. The recent dip isn't even visible here on this chart. You can see the Chinese mining ban in mid-2021, that big dip. Other than that, it's just been up and to the right. And as I mentioned, the hash rate in my mining video with Zach from CleanSpark, I mentioned the hash rate went up 600% in 600 days. And that's pretty visible here on this chart too. But the question is, per this chart, in my opinion, I believe the stronger the hash, the more secure the network, and the more money it attracts. And that's it. So price should go up here from here. So that would mean price follows the hash. We'll see over the next couple of months. It'll be very interesting. In fact, over the next 13 months are going to be absolutely fascinating. Thank you for the question. Now, next question is from Sign Alone. Can you do a deep dive into Flux? So, first of all, a deep dive itself takes at least 16 to 24 hours for a token. But what I'm going to do is showcase the quant approach that we have here. So I can run numbers and create models real fast based on quant, which is actually what we do here. We don't have any emotions. We don't look at any of the silly factors that are out there, just all data. So for this, we're going to use our compendium and some of our key ratios as well to show you where it stands. And this is a pretty cool tool. So let's jump in. So don't consider this as one of my token deep dives, but this is just a quant approach, how it stat ranks against its competitors. So first of all, this is what we call the data management category, and that's where Flux fits in. Now, there are some names, everybody calls things different things. We refer to it as data management, and this includes protocols like Chainlink, the Graph, Mask Network, Band Protocol, Ocean Protocol, Flux, Origin Trail, API3, Dent, Radical, New Cipher, Covalent, and a few others that are down the line, but they're kind of very small, very insignificant. So we're just going to look at these guys, and you can see the heavyweight in the room is number 19, which is Chainlink, and then number 2 is the Graph, etc. That's the market cap rank, and then prices beside that. But what we want to do is take this and pull out some data and see how they compare across the board. So one thing I like to look at is the delta down from all-time high and percentage back to all-time high. So here you can see the red is also the up, how high they are above the all-time low. And you never want to look really at a token that's still hovering around the all-time low area. The red percentage is on the left axis. Let me get that right. No. I should have written them on the side here. The percentage down from all-time high, is on the left axis. And the up from the all-time low is on the right axis. And you don't want things bumping around the bottom, not really getting off the ground. And that's where things like API3, Track, Link have not done very well. But typically what I like to look at tokens that are up off the ground and performing well, rebounding with a lot of upside. And that is the blue part, the percentage down from all-time high. And from this, we create our ratio. I had a little trend line there as well as where you want to be above, if at all possible, for some of these names. And you can see Flux is above that name, in line with kind of where Mask is. And of course, Graph is leading the pack. It was this methodology that I was able to identify Graph in early November as a hot mover, one of the best ones for the next bull run of all cryptos, from over 500 of them. And here, this is the ATR model. So it shows you, based on our calculations, how high, if the bull run happens and these guys do well on average based on a few different ratios, what the return would be for these assets. And you can see the winner of the pack is the graph. And if it does what it potentially could do, that is nearly a 750% gain from where it is today. Craziness, I know, but it's just numbers. And you can see Flux is there. Per this model, it could do about 120% gains if it performs like it did last bull run. Other names that did very well was Nu and Band Protocol and Rad. I don't know Rad very well or Nu very well, but they are the ones that potentially have more upside. Let's look at how they compare from a tokenomics crypto compendium score perspective. All of these assets ranked together, and you can see of all of them in this whole category, I think there was 15 in total, the Flux scored in the top 3 of this category with a compendium score over 6. So that a compendium score of about 6.21. And it is 2 others that are beside it. So that is extremely good. It's outperforming names like Link and the Graph. So from a compendium course perspective, very, very positive. So we like that. Let's look at where these things have come and go where they've been since the Bitcoin all-time high. And this is a chart where I put them all on chart to show you exactly how far they are down and how they have performed. And again, it's a bit of a busy chart, but I blew up the performance ratios here. Obviously, Bitcoin outperforms the whole class of data management assets. And that's probably the biggest takeaway. So for people dabbling, yes, when they go crazy, they can do really well. And yes, if the ATR model works, Graph could do very well. And others could too. But here you can see Bitcoin is down still from 57% from its November high. Mask down 60%. Ocean 63, API 64, and Flux 67. So these guys have held up very well compared to the rest. Chainlink is down 78, Band 79, Track 81, Dent 84, Rad, OTX, that's Ocean, and Graph down 87%. Those others not so well. So the key is really to factor in all of how they compare against their peers, what the tokenomics looks like, and what the upside is. And from that perspective, would I invest in Flux? No, probably not. But I haven't dug into the management team, the history, the business model, how much money they make, etc. But just looking at pure quant from our system, there might be other better plays to look at. So I know you've been looking for the Flux deep dive for a while, but it's not worth a detailed deep dive from my perspective because I don't see as much upside as other names in the peer group, although the tokenomics for Flux is actually good. So I hope that helps. Next question is from Justice Will. I'm beginning to make my exit models for coins based on the one you shared from Matic. I have a tough time evaluating how high the next bull run will go, so I'm sandbagging an input, a 2 to 2.5 multiple on the previous all-time high for serious tokens such as Sol, ETH, Matic, etc. Am I being too cautious? I think you might be being too aggressive. If I understand what you're saying here carefully, you mean that it could 2 to 2.5 times the previous all-time high. That would put Solana up near $500. I don't see that happening at all. So let's look at what we do have. That we built a model exactly for this purpose, and you can adjust it based on exactly what you wanted to do. So currently, we have many different settings that you could dial in terms of how aggressive you want to be, how bullish you are on the asset, and the time frame you want to analyze to be able to predict how high we could go based on layers. And I didn't go very aggressive with Matic. I went aggressive, and this is what you're looking at here, because I think it could get above all-time high per this model, but not too much above it. And very aggressive goes a lot higher. It takes the price up to $4. But the question is, could it do that? And I'm not sure. And the reason I'm concerned is the competition. All the work done by other players like Arbitrum and Matic. There's too many people going after the layer 2 space. How can they all garner value from that positioning? That's what I'm not sure of. Now, ZK could save the day, but the jury's out on that. Matic are well positioned in the ZK area. but we just don't know where it's going to go. And in terms of the others, I can do that another day if you want, but we're going to run out of time in the show here to analyze other tokens with this model. But I think because Matic held up so well during the bear market, I don't think the upside is as much as many other names that are out there. Many can do 5x, 3x, Matic maybe 2.5x per year model. So let's go to the next question. Is from Brunetti. What about a HUD-8 MicroStrategy ARB in an IRA, since you brought up the GBTC scenario? Yes. Last week, again, we had another member pair trading Grayscale Bitcoin Trust and MicroStrategy, I think. I can't remember exactly what it was, so long ago. And we had a problem with our file storage system. Believe it or not, we're talking about data management, so I wasn't able to pull that up. But what I can show you, though, is the pair trading between HUD-8 and GBTC. Yes, it works like a charm. I didn't run all the numbers, but here you have a simple pair chart with a trend indicator in there. And at the bottom left, it would have been circa January 2022. That's when you flip Grayscale Bitcoin Trust into HUD. And when it goes above the top red line, that's when you flip HUD into GBTC. And you could do it twice. Sometimes it doesn't get all the way down. So depending on exactly how the trend is moving, that's when you determine exactly what you do. So if that was the case, you would have stayed in that swing trade for quite a few months, maybe a full year or more. Then at the bottom, towards late 2022, you flip Grayscale Bitcoin Trust back into HUD. And again, flip back in Feb 2023, just 3 months later. And then another 3 months after that, you flip GBTC into HUD. But remember as well, the problem with these two, GBTC is a function of the discount, and that discount can change radically from day to day. And HUD is just a volatile beast. They're going through a lot of stuff now with the acquisition and some other problems, some legal issues with some mining facility somewhere. So you always have to keep an eye on what's happening with the macro and all the business environment that these players are in, because that determines how these things swing. But you can do it for sure. So thank you for the question. Next question is from Hard Money. Should Tesla be looking to acquire a battery tech company like Amprius in order to secure their market dominance? The 4680 hasn't been a game changer so far, and the competition are acting aggressively in this area. So this is a very good question, and I had to dig into Amprius. So let me tell, for those who may not know what Amprius is, Amprius is a battery technology company that specializes in high energy density lithium-ion batteries. I believe, is the focus of this type of energy density batteries would be things that have a very keen focus on weight. For example, Boeing, the aircraft manufacturer, will pay $600 extra to save every pound of weight. So there is a market for this, but there's many other factors that go into battery production. So let's look at the key facets of an EV battery. First of all, there's energy density. This refers to the amount of energy that can be stored in a battery per unit volume or weight. And the higher the energy density, the more energy in a smaller package, which means, for example, a plane or an eVTOL or electric helicopter, where weight is extremely important to take off. Then you got your power density. This refers to the amount of power that a battery can deliver per unit of volume or weight. So I always think of energy density as the storage rate and power density as the transfer rate, how quickly you can go from 0 to 60 miles an hour in a car, for example. That would be transfer rate. Then you have another key factor for Teslas is charging speed. And that basically is how quickly a battery can be recharged. Faster charging times make EVs more convenient and practical for everyday use. And nobody has a better charging capability than the new semi-trucks from Tesla with their, I think it's a mega battery or mega charger, they call it. Then you got the cycle life. This refers to how many times the battery can be charged and discharged before its capacity. Performance degrades significantly, and longer cycle life batteries last longer and require fewer replacements. This is so important. And safety, if you crash, you don't want the batteries to explode under extreme conditions. Could also be high temperatures or mechanical stress. And this is so important in passenger vehicles. And then this cost, and this is the $1 trillion question. The cost of EV batteries is a major factor in the overall cost of an EV. Lowering the cost of batteries is key to making EVs more affordable. But the key is, when you look at a company like Amprius, yes, they can make a very high capacity battery in a very small package that doesn't weigh that much. But can it run for 1 million miles? Can it handle the storage rate and the transfer rate and the charging speed and all that type of stuff? That's what matters. And that's what Tesla optimized for. So I'm not sure that Amprius would be a fit for an acquisition. But it is important if they do get into things where the weight is extremely sensitive. So here, this is a quick graphic of how it compares to other assets. This is courtesy of, I forget his name. The guy who tears down, the teardown titan, Sandy Munro. Yeah, this is courtesy of Sandy Munro's company. But on the left, you see the 2170 Tesla. 242 is what they call the watt hours per kilogram, basically the amount of power per weight. The Rivian 2170 has a little bit more than the 4680, a little bit less than the Rivian. The Pouch, which is from 285, which is good. And then the Amprius, nearly double the 4680. So you're dead right. Others are better, but not when you look at those 5 factors. And this is so important. Or these 6 factors. Tesla optimized their battery production for these elements here, not anything else. Now back to the company itself. This is a little bit concerning. They have flat growth despite their supposed wonderful technology. Why is nobody buying it? That's a question. And then the negative earnings. No line of sight to any profitability. So you're dead right. Yes, they're definitely an acquisition target. And with that, the question is always, can they produce at scale? Can they produce efficiently? Can they survive? It's clearly an acquisition game and a waiting game. And therefore, I don't have time to wait. I like a higher probability of winning. So I wouldn't touch it. And I'm sure if Elon Musk wanted to buy them, he would have already. So with that, on to the next question. Thank you, Hard Money, for the question. Next question is from AB. Will the Yuan or other currencies take over the US dollar supremacy in the long run, and will this reflect on the US stock market or not? So this is a big question, and I don't want to touch anything controversial, but there's been like 100 videos and articles and Fox News and all sorts of TV programs really worried about the dollar decline or the dollar imploding or whatever. But let's just go through some facts and explain where we are, where we've come from, because there's a lot of FUD out there. There's people saying, oh, the dollar's going to burn, and there's other people saying dollar will be just fine. We'll find out the truth right now looking at data. First of all, these guys have a plan, and per Unusual Whales, if the US dollar's global supremacy erodes, America will face a reckoning like none before. And that was from Fareed Zakaria. And he's a guy who's a bit of a fearmonger. He likes to, fear sells, so that helps his show. But anyway, take that with a grain of salt. Then you have Fox News, of course, big shift from the US dollar. It's like the world is ending, like the dollar's going to die. There's a perfect storm happening right now. Xi threatening big changes after 100 years. So all this type of stuff has everybody very nervous. Let's talk about BRICS, because these guys have a plan. It's not just Xi and Putin. It's also heads of India and Brazil and South Africa, etc. And they are clear that they are done with the dollar, and they want to build their own currency. And they're making steps to do stuff. So it's been quite an active year for the so-called dollar decline stuff. And some of the pieces are slotting into place that would tell you that. So what I did was pulled up the size of BRICS, their GDP, and compared it to the global GDP and compared to US GDP. And as you can see, the BRICS countries are quite substantial. Quite substantial indeed. I just got a warning that I'm running out of space. Hold on a second. I don't want to... Bear with me. I don't want this computer to crash on the fly. That would not be good. I need to kill... All right. Bingo. Sorry about that. Live TV. That was a kind of a scary moment. Anyway, back to this. BRICS GDP, 30 trillion. Global GDP, 100 trillion. US, 23 trillion. BRICS, again, Brazil, Russia, India, China, South Africa, and they want to build their own currency. And this is per, I think, the Russian deputy chairman of the state Duma. But that is big. That is big. So when you look at this GDP number here, you've got to think, okay, it's not just BRICS trading amongst each other, but all the countries that BRICS trade with, if they do have their own currency, many of those countries could be trading in dollars. This is dangerous because BRICS is bigger than the US GDP, and that could have a significant impact on where we are today. Also, this just came in yesterday, or this morning, I can't remember, from Proud Elephant. Just in, India will be ditching the US dollar, will trade in rupees going forward. Another major loss for the Biden administration, Bill, and people getting political. But this is their trade with Malaysia, which is quite substantial. Many, many scores of billions of dollars. And it's just the beginning where everybody is kind of upset with the dollar. So let's kind of look at one other factor before we go to the summary of where we could be going with this. Over the last 25 years, the use of the US dollar for foreign exchange reserves has steadily declined from 72% to 59%. A lot of people will say, yeah, the dollar's just fine. It hasn't gone anywhere. Not according to the IMF. And this is the IMF statistics here. And I think it's going to be a lot worse in 2023. But the question is, what's happening? So the euro usage did go up from about 19 to 21%, but the Chinese yuan went from 4% to 10%. And you're going to see a lot more of that activity happening as the Chinese lay down the law and force people to use the yuan or the digital yuan for trade as they go forward. So that's not good. I don't see us ever getting back to 72%. Now, quick summary before we dig into will it affect the stock market. So you have Saudi Arabia entering a trade alliance with China, Russia, India, Pakistan, BRICS, etc. You got China and France complete the first gas deal using Chinese yuan. Dollar's gone. That was a big change. Elon Musk is very concerned. He said the loss of the US dollar as a reserve currency is a serious issue. And 4, despite all of this, I don't see things being kind of a big bang. Let's all get off the dollar all at once. But it will be a gradual decline over time because it takes time to reorganize all the stuff. But some of the news releases over the past 3 months have been quite startling. And that could take us down to 55% of global trade. So we'll see. Now back to your big question, which is more important, is what does the loss of US dollar hegemony mean for the markets, etc.? So I believe if the US dollar loses its hegemony, the stock market will face multiple challenges. Firstly, foreign investors will lose interest in US stocks and bonds, leading to a decline in demand and a sell-off in the stock market. Not good. Second, a weaker dollar could increase the inflationary pressures and negatively impact corporate earnings, further pushing down stock prices. Additionally, US government, and this is the hard piece, which we're already seeing right now, may face difficulties financing its debt, resulting in higher interest rates that make borrowing more expensive for companies. And this could also slow down economic growth and negatively impact the stock market. So the way, just the last piece to make sure people understand, the way you entice people to taking on your debt is you increase the return, the interest rate, and that'll make it expensive and harder to get and also make everything much harder to operate as we go forward. So net, this isn't good. It isn't good for the US. There's no silver lining at all. But we'll see how aggressive the drip is. There's lots of data points you can look at and monitor to see exactly how fast it loses. But fingers crossed, it's all alarmist because you've got to look at the other side. Do you want to hold spy coins like digital yuan or a dollar? Unless the dollar becomes a spy coin too. That could change that calculus, but I don't know. But the trend is clear. It's going to be gradual drip, I imagine. Next question. And this one is, I thought long and hard about this. And some people like me because I don't sugarcoat stuff. I want to help people. And this is kind of a tricky one because many of us have faced challenging decisions in life, especially around careers. So take everything with a grain of salt. I'm just a guy on the internet, but this is from two people, Airsaver and Chad Tai. I'm 40 entering a new career and I'm interested in coding. And with the rapid growth of AI, what advice would you give someone who is interested in becoming a programmer? Would you recommend to completely stay away from these skills and go with a certain niche within the career that may not be affected by AI as much? And the second question, with the AI future, how would you suggest teens start preparing career-wise? I know few, if any, of their teachers are thinking about it. That's the last point there from Chad Ties. What really concerns me is teachers and universities and syllabuses, etc. They're not keeping up with what the world needs today, and that is very alarming for me. That's why I've been pretty aggressive with my stance, saying, if college is very expensive, you're losing 4 years of life, and you're going to come out backwards behind the curve. Why even bother? Go learn yourself and using ChatGPT and YouTube videos and stuff. So let's dig into the first question. So learn to code at 40 plus. And I know a lot of coders. I know a lot of top engineers out of top places in the world, like Bulgaria, who are in places like Google and Cisco and stuff. So I talk to them a lot about this stuff. And I actually pinged a friend about this yesterday too. But things to consider, you're up against folks who are a lot younger. Like some people start coding. We have a community member who has a 12-year-old son who's coding video games, which is startling. But you're up against much younger folks that do have the potential, some people believe, to skill up faster. There will always be a need for world-class coders. And the question is, can you be one of these elite coders starting so late? And the other example is, for example, sailing. If you start jumping in a boat for the first time at the age of 40, compared to somebody who started sailing at the age of 7, who was sailing around the world all his life, you're going to be at a severe disadvantage. And that's kind of one way to think about it. But can you be elite? Everybody can do something special, but I think maybe a little bit late, but I'm not sure. I do believe as well, average coding skills will be done by AI. So you've got to be absolutely elite. We're talking in the top 2 percentile, 5 percentile of coders. So here, I really do recommend you should pivot to a skill that's much more around learning how to drive creative coding using AI. Not coding per se, but learn how to direct the machines to do it for you, do the heavy lifting. So that would be a position I'd think about too. In addition, bear in mind, I've stressed this a number of times before, there is a big trend towards the gig work and freelance coding in the tech industry. And freelance coders are sought after for their flexibility and autonomy, while companies use them to save money and reduce overhead costs. So offshore sourcing of coding jobs is still ongoing, and companies outsourcing to countries where labor is cheaper. So this could also be a bit of a headwind as well for somebody jumping into this space, because you're competing against people all over the world. But there are advantages for on-site coders who have much better access to collaborate and communicate and do quality control within the enterprise. So that is an edge, but it's difficult to predict the future of coding jobs. But there will be a demand for those elite coders, as I call them, but you've got to be elite as you go forward. So beware there too. And if you saw the All In podcast, I think it was yesterday, they were talking about how AI has actually shaken up the gaming industry for people that used to code video games. So, and for Chad Tai, some questions, and I have a list, rolling list that I pull from different sources. And these are some of the careers that teenagers need to think about avoiding, I believe, because of AI. And it's a controversial list again. I'm not going to sugarcoat stuff, and I'm not saying this affects people who are in these professions today, because I guarantee you, all of you are probably. But if you are 13 years of age and you're thinking about a career, or 15, think about what AI will do in the next 10, 20 years. So, you've got writers, and, there's this talk of AI writing complete movies, personalized video games from beginning to end in minutes. Artists and painters, people are challenged by the AI art that's being created. It's getting better and better every day. Customer service reps, that'll all be automated. Data entry clerks, automated. Truck drivers, chauffeurs, when FSD comes, that'll all be automated. Financial analysis and traders, that's what I've stressed here for a long time. I believe 3 years from now, our window will be gone. I hope I'm wrong, but I do believe that. Factory workers, legal professionals, accountants, IRS agents, healthcare workers. These are names that people like Goldman Sachs and others believe are at risk. And I'm just sharing that. And one really amazing case was somebody had a sick dog. I think Cooper, at P. Cooper, you can read about the case on Twitter online. He claimed that the AI chatbot saved his dog's life by diagnosing a blood condition. He was able to submit a blood sample to ChatGPT because the vet didn't know what problem the dog had. ChatGPT figured it out very quick and saved the dog's life. So this is what we're up against, which is really scary. But what I do stress is everybody, and even with kids, they should all do these tests now. And people who are looking for a career change. Find your magic power. There's some really cool online tests that'll help you discover not only your strengths and talents, but also what you enjoy. So you got your MBTI, your Myers-Briggs type indicator. We've done a lot of work here on the importance of personality and trading styles. Unique work that was done nowhere else. In fact, if anybody ever missed that, we'll add the playlist here. It is very important to know what your blind spot is for trading. Very important to know what your blind spot is for career choices too. Number 2 is the Strengths Finder assessment, really cool. And number 3 is the Holland Code career test. Check them out. Just do a quick Google search. They'll pop up. It's well worth it to do those tests. Do all 3 and help determine your path in life. Again, pick what you're good at, pick what your brain is geared for, and what you enjoy. Because, remember, remove the lid. Everybody has potential. So the sad thing is sometimes people go through life without actually knowing what they like to do. And you don't know what's on the inside until you put a demand on your potential from Joel Osteen. I thought that was very important here. But remember, pick a career that you love and where you could outshine 90%. That's the magic, everybody. And the favorite part is helping animals. This week, we donated to the Best Friends Society to help cats. We have Bryce, Coda, Persia, Reindeer, Patrix, and Peridot. Because yesterday, we talked about cat algo. Cats trading with their whiskers. Of course, it was a joke, but we thought we'd keep with the theme. So thank you, everybody. Hope you enjoy that. Hit the like. A lot of work goes into this stuff. And let's do some questions out there for everybody. Let's check on Bitcoin. Bitcoin had that nasty little dip. It's still wicking away, flushing people out, but it's giving people chances to stack. And the people that manipulate the markets are learning that very fast. So I'm going to drink some water and do some questions. Hey, our family wanted to thank you for... This is so cool. Dedicating to our son on Thursday. I don't even know your son's name. But he also wanted to donate some money for the animals. Nope, tell him to put his money into Tesla stock. Not financial advice, but I know he's doing that already. And that would be the best use of that. We do a lot for the animals, but what you can do is let us, well, you gave money anyway, you're so generous, but what you can do is maybe let us know what animals your son's like and your son likes, and we can take care of that too as well. So actually, this is a great question, considering it just popped up. Let me pull the slide back. This is, have you been able to investigate the origin trail any further? Yes, in fact. It's funny how everything kind of comes together, and this is not planned at all. So let's pull up these slides real quick. Origin trail, that's called track, and you can see here where it ranks in terms of market cap, 189, and I can tell you, show it, the track is here. One of the things I don't like about track is still bouncing around the bottom, and that is the up from all-time low. It hasn't come off the all-time low, which means it doesn't have momentum. That's a bad sign. Second of all, it's good we can do this actually. The ATR, if you look at track here, where is track? I don't know why it's not on here. Maybe the reason track didn't hit the ATR is because the model must have missed the all-time high date. I'll check that out. But let me check one more thing on this as well. Track 189. And the compendium score for track is, yeah, it's below where we would want it to be. It's about 4.2. So from that perspective, you're better off with a name like a Flux or a Graph as we go forward. So I hate giving bad news, but I wouldn't touch Flux, and that had a much better score. So Origin Trail, I'm not sure. I still think in this whole category of data management, I think the Graph is has the most upside, the most adoption, is making the most money. And I just compare assets to who they're competing against as we go forward. So Fireman, hope that helps. And please do your own research too. These are just models, just looking at data. But these models do work. I can tell you that. There's a 92% correlation between the compendium score and price action. So from that perspective, it's good. AG, what's a good entry price to top up on more ETH? I think it's funny. I was thinking about ETH myself. I got a tiny bit of ETH at around, I can't remember what it was the other day, because I wanted to put some in a certain place to have as currency to do stuff. So I felt it was good to have a little bit. Let's have a look at the chart now for Ethereum. Well, it's exactly at 1800 right now as we speak. Let me see. It's been an interesting performer lately. I think one of the things I will say about ETH, and not show up a chart, but if you look at the Bitcoin ETH chart, it is definitely at a turning point. So from that perspective, Bitcoin ran, ETH I think has yet to follow a good bit. So anywhere from 16 to 18. Let's see how far we fell down. It looks like, at least over the past week or two, next 1700 level is kind of a bottom, and it tops out at that 1830 level. So it's kind of bouncing in that range. So anything low 1700s, even here, I think it's ready to run if the crypto market continues to run. But again, we've had an incredible first quarter of the year, mind-blowing crypto gains. So that type of run is not sustainable. So hold on for that for a minute, and we could get better opportunities as well to pick up more ETH. But I personally, from my perspective, I wouldn't buy it above 1400. And I have a lot of ETH. I'm trying to diversify down my ETH position into other assets. Stephen Watson, hey buddy, any thoughts on Solana? Yes, Stephen, good to hear from you. There's a lot of good stuff coming in April for Solana, and if ever I talk about it, I get a lot of weird stuff happens. So, but yeah, we'll be doing a lot of update reporting and analysis on some of the growth of the chain. There's big moves coming, both with Render and Helium, as we go forward, which will drive a lot of adoption on networks, and also other things are happening more. The TVLs begin to grow again. The DEXs are beginning to do better after all that happened in November. So it's recovering slowly, but the team are playing the long game. They're doing all the right things. They're building the right products. They're building the right product market fit. They're getting the adoption. And if you just look at any kind of key metric, with the exception of TVL, I mean, this smashes everybody. Developers, breadth of dApps, the users, the transactions, NFTs, second to only ETH out there. So tons of good stuff. But Stephen Watson, you will see a lot. You will hear a lot from me in April on Solana, because there are really good things coming. So hold on to your head, and thank you for asking. James Brook, could you do a deep dive in Caspa, please? Caspa, I was actually digging into last night because it's gone up like 600% in 3 weeks. Everybody's looking at it. It's a very, very small market cap name. The problem we have with Caspa, let me just pull up my notes here, because I did write some stuff down yesterday. Give me a second, if this works. Hold on a second. So we don't have, so I do everything now based on, we have two things called the SCP Profiler and the Crypto Compendium. And we don't have enough data. So, for example, DeFi Llama doesn't track Caspa yet. All the big data sources that I use don't have any data on Caspa. We can't populate the SCP profiler or the compendium because there's simply no data. It's like hidden thing. There is some good news. It is being built on Rust, and we know the best platforms are built on Rust, so that's a big positive. But I can't get any data on other things, but nothing super impressive. Nothing super impressive on adoption, nothing super impressive on TPS, etc. James, and this is the problem with crypto is once things move, people get excited and then they FOMO in. And that's why I look at fundamentals and I benchmark everything against everything and pick the winners either in the category or in the class itself. And when there's data hidden, I don't like it. I don't trust it. So I don't know why it's being pumped like this. But I know it's got everybody's attention. It got my attention. In fact, if I go to I have a top 100 crypto list. Let me pull it up because it's been bouncing off the top of that. Even today, it's still up. Like yesterday, I had a huge day, up 30%. Today, it's still up 5.5%. It's beating everything else. And that just drives everything. But I wouldn't, when things pump like that huge amount in a short window of time, like I always say, don't chase, replace. Find the next thing that's going to pump. Deep Random Thinker, pump aside, thoughts on Nexa. Team behind it is part of Bitcoin Unlimited and appears to be following the Caspa price action during the bear cycle. Here we are again. This stuff is pumping. I have never even heard of Nexa. Let me have a quick look. Like one of the reasons we did so much work on the compendium is to be able to identify treasures that haven't been discovered yet. And literally, this is what rank number 335. Actually, hold on a second, because now we've expanded everything to the top 100. I'm going to have a quick look and see if there's enough data to make a decision on this. Imagine if we uncovered something before it moved right out the gate. Hold on one second. I have to pull up our database. Whoa. That's weird. Hold on one second. Gotta clear and find because it's pulling. Nope. That's weird. Okay, so we only analyzed the top 500. It looks like Nexa just bounced into the top 500. Yes, it did. It came from obscurity. Only. Wow. Yeah, it's gone from 0.000092 to 0.00032. Sorry. Anyway, yeah. I can't tell anything. It's like a DeFi play. It's probably it'll have horrific inflation. It'll have shit tokenomics. But yeah, this is what's happening again all over. I can tell you right now, looking at some of this data, it is not something I would touch, but I'm very conservative. I don't want to lose money. So, yeah, sorry about Nexa, Deep Random Thinker. I will keep an eye on it, but this just looks so crazy. Like 10% of the supply is circulating. The price has 4 zeros before it begins. I don't know. It's just one of those things. Be careful out there, everybody. All this stuff is very dangerous. Viciously, with OPEC slowing oil production for the rest of the year, will this speed up QE in the States, and how will it impact equities? Yeah, in terms of QE in the US, the strategic oil reserves are literally running at a very low level. I'm losing my voice here. They promised they would rebuy the oil, I think, under 70 or under 68 or $65. I can't remember the exact number. Oil right now is... Bear with me one second. 75. Yeah, it looks like it's ticked up quite a bit from the bottom. They should have bought when it fell into the 60s, and they didn't, at least as far as I know. But yeah, oil could very easily, I always say it ranges between 60 and 80, but could go to 100 pretty easily. And if that happens, they will need to print a lot of money to replace those strategic oil reserves, which are very critical. But I think there's many other things that are speeding up QE as well. I mean, the deficits are exploding. The Fed is going to be out of money in 2 weeks. You got the debt ceiling that needs to be raised. I mean, it's just viciously QE to infinity. That's just what's going to happen. AC1, just want to let you know how much you've helped to stay positive throughout a very hard year. You got your keys to your first castle. Congratulations, AC1. So happy. Thank you so much. And I am literally losing my voice. And that was the last question. So just be careful out there, everybody. Remember, crypto is the Wild West. Don't take on unnecessary risk. And there's a lot of risk out there. There's a lot of things that have a lot of value and they are not valued. And you have things that are new to the market and they have way more market cap than things that actually provide real value. So it's just, crypto remains illogical, but eventually the market will be a weighing machine. That's why I need to be in the right assets. And thank you for your super stick as well. Zeno V, Glenn Johnson, KN, St. Jude Ninjas, thank you, Mike. Crypto Dinosaur, Dogwan, Matsu, and Nick Markovsky. Appreciate you all, everybody. I'm going to call that a wrap here because I'm losing my voice, literally. Thank you so much, everybody. Hit the likes on the way out. Let's get the message out there, and I'll see you all tomorrow. Oh, by the way, tomorrow, DCA, I think I'm not sure what time. It's either 10:30 Pacific or 7:30 Pacific. It's going to be on CTO's channel, but I will tweet out. Follow me on Twitter. There should be a link somewhere for that. And you'll get notification 30 minutes before every stream, wherever we are. Okay? Thanks, everybody. See you tomorrow.